Hello, everyone. I hope that you had a wonderful weekend, and I hope that so far you have been patient and doing nothing, as I suggested, right? So, as you guys can see, so far the press action this week has been, you know, very, lackluster, slow, choppy, dead. Why is this? Why was this? This is due to the fact that, this week we have CPI, and this is something, important. Whenever we have CPI during the week, right, and there are no news events on Monday, right, whenever we have CPI past Tuesday, then Monday will, tend to be more choppy. Most times when I'm here talking about, you know, the economic calendar, this is actually where most of the, important things that you need to implement are, right? There are also, ways, and I saw someone send me a message talking about, SMT between news events and stuff like that, which you are onto something, and, but we're not ready to talk about that yet, right? Whereas, of course, you can compare the news events whenever you have Euro and USD news being released at the same time to see, you can just compare the volume and see which one is greater than which one, etc., etc. Anyways, so today we had no news, which is why we had little to no movements. Tomorrow we have news at 10 a.m. It will be, a tradable day. We will see some type of movements, right, during New York, of course, the New York session. You already know what we look for, right? We need to see cracking correlations before we do anything at all, right? On Wednesday, we have news at 10 a.m., right? And Thursday is when we have CPI. So this is the weird part of this week. This is the rare part, right, of this week, right? So it's the second week of the month, right, which is when we usually get, most of the volatility for the month. Usually the tipping point of the month, right? The first week is usually lackluster, and then we get the second week, CPI changes everything. So we have CPI further down in the week, right? Usually it's Tuesday or Wednesday, but due to the fact that we have two Fed chair testimonies, Powell talking twice in a row, right? Tuesday and Wednesday, right? Which is why I'm guessing that they pushed it down to Thursday. So Thursday, in my opinion, is already 75%. I'm guessing it will be the higher low of the week for most asset classes, right? Thursday, already, just by looking at this, right? Friday, we will get some movement that whatever happens during the week, and realize that this is usually why Fridays are pretty, easy, right, to trade. And if you realize, most of the news is when the New York session, right, Q3 of the day. And this is why the New York session is the best session. The New York session has the most volatility. The New York session will give you the highest probability trades, right? So Friday, whatever happens during the week, which for asset class that you're looking at, expect the range to be returned to. So if we have CPI, spike and then drop the index futures, then Friday should, just return back, give a small bounce or a bounce, return back into the range. Now we'll look at the Forex chart. So firstly, at the bottom of the charts, right, those red box, the red box and the green box, what do they indicate? They indicate the quarters of the year, right? So here, now looking at the Great British Pound, this high right here, which is a significant high, it's a very important high, right? I will talk about why it's important very soon. This is the high of the last quarter, right? Of the previous quarter of the year. So the second quarter of the year, this high is the high of that quarter, right? And that's not the only reason why it's significant, right? The other reason why this high is significant is because this is the high, right, which caused the price to break down. This is the high which triggered, the sequential SMT, which caused this reversal, right? This high right here, right, translated over to the euro dollar would be this high right here, right? And this high is significant as well, right? So usually, right, whenever we have sequential SMT, which is something to look out for here, right, we could see price push above this high and, fall back within the range, maybe returning to this fair value gap right here, right? This one would be, the quick food, for the algorithm. But, this one here, and, we could be going below this low as well. But we would need to see, some, immense volatility above this high. Then we would, like to see this high being left and, this high to be taken. And all of this idea stems from the US dollar, right? Due to the fact that, we have these untouched highs here, buy side liquidity, equal highs. Then here we have relatively equal highs as well, right? And here we have symmetrical, and this is something, to take note of, is symmetrical consolidations. So there are times when you have consolidation occurring at the same time across, the triad that you're looking at. And there are other times when it doesn't happen. Whenever, right, we see this happen, as we see consolidation here, and right, we're talking about this real time, right? We see consolidation here, and then we have consolidation here as well, right? So this consolidation took place at the same time, right, across all pairs, right? We could see the high of this consolidation taken out, the low of this consolidation taken out, and the low of this one taken out, right? If we have one of them being taken out and the other left in place, that would be a Kraken correlation, right? But ultimately, currently, right, this is basically what we live for, right? Choppy price action, unclear price action. And why is that? Because unclear price action breeds clear price action, right? Once we get price, right, Kraken correlation, and we see it reverse, right, which is, break below this low, leave a gap, then we go to the lower time frames and look for entries, right? Here, right, you can see that there is basically no level right here for the US dollar to, react to. So the thing that would make this, the US dollar actually bounce is sequential SMT. Already we have hidden sequential SMT right here, as this close right here is above this one, whereas this one is below this one, and this one is above this one, right? So already there is strength in the market for the US dollar, right? But here for the euro, right, it's pretty much, unclear. If we scrub out a little bit, you'll see that for the entirety of the previous quarter of the year, right, we have just been range bound, right? We've just been chopping around here, chopping around as well, right? It's just been choppy price action. And when we're, looking for market structure, the assets that we look at in pertaining to the FXD, which is the Forex triad, is the US dollar and the euro, right? Due to the fact that they're literally mirrors, right? They literally mirror each other. And whenever they crack, price reverses. So that's what I, think for this asset class right now. Currently, nothing to do, no buttons to press. We need to see market structure. We need to see a cracking correlation. We need to see SMT fill. We need to see the precision swing point. And so far, right, we don't have, that anything that's strong enough to, get me to press a button, right? And this is due to the fact that, we have, these global issues, spooling up, the elections are getting closer, which, is something that's very important, is that now is hard, right? If you look at, Twitter, we usually see people just, posting setups. You don't see that anymore. You don't see people calling markets anymore. You don't see that, influx of, retail data that's usually there. And it's due to the fact that there's nothing to really do, right? Right now, the real traders are being tested. Your patience is being tested. Your skills are being tested. Your risk management is being tested, right? So if you it was hard to wait for this right now, even for price to be at this point right now, for price to, be setting up for sequential SMT, right? Some people, they lose their minds. It's very important to, build that skill. What is that? Patience, which is why, whenever we don't have news events on Monday, I love skipping it, right? Why? Because, it gives you guys, it tests you guys. It stretches your patience, right? You're exercising your patience. You're getting more patient. You're learning how to wait more. So whenever we exit this type of market condition, which we will, right? And whenever we do it, it will be insane, right? It will be crazy. It will feel as if, you've been walking around with, 100 pounds on each feet, and you're running 10 flat on the 100-meter. How much do you think you're going to run now? You're over like 7.5, bro. Could be insane, right? Conditions will be clearer. And all we need for that to happen is what? For the dollar index to break out of this range. Whenever the dollar index is range bound, and this is something to take note of, right? And it's better to look at this on the monthly time frame. So on the monthly time frame, and this is me teaching you how to gauge market conditions for, right, the index futures markets, which we'll look at right now. So whenever we have the US dollar index range bound on the monthly time frame, the index futures triad, right, usually just keeps going up, right? So it'll just be going up. Whenever we have range bound price action for the US dollar. And once it breaks, the US dollar breaks out, then, the index futures triad begins to move in the opposite direction in terms of, a higher time frame trend. That's, something important, which we will be going deeper into. So last week, right, this is the move that we anticipated, right? And, it's pretty good, even though it's still low probability. Don't get me wrong, right? It's not the best time to be trading due to the fact that first of all, we have the Dow just doing nothing over here. If you're trading the Dow, you have a strong stomach because, like, I cannot do this, right? Currently, I have to be trading, as I've said before, like twice a week using the 50-minute time frame, right? Sometimes the 5-minute, but nothing below that due to the fact that we're at all-time highs. I need to see, right, a two-stage cracking correlation at least to like just get me to think about doing something, which is here, which we saw, right? We had a cracking correlation, right, between the monthly cycle, then we had a cracking correlation between the weekly cycle. And this set the stage for, bullish price action, right? And before, right, this even happened, we expected it to happen, right? Then price pushed up here, right? We still expected, price to go higher, which it has. So what does that mean, right? Okay, we already expected this. We already bought this. Whoever did, if you did, congrats. If you didn't, next time you should, right? Take profit here. You should be taking profit here if you haven't took profit here already. You see, whenever, we're in this trend, a uptrend, we need to see this type of price action, which is what usually happens is we have choppy price action, right? Price falls below the low, right? Into discount. We have a two-stage cracking correlation, and then we have higher prices. Prices blowing out all-time highs again. So we'll see this type of pattern just keep presenting itself, right? Until the US dollar just breaks out of this range, because it's just range bound. And whenever the US dollar is range bound, right, and the money is not flowing into that market, where does it go? It goes here. This is where it goes. So all of that liquidity is being pushed into the index futures triad. Today, there isn't, much to talk about in terms of technical analysis, but yeah, that's it, right? Right now, we have to just be patient, right? And this is one of the best lessons that you can get, right? Be patient, backtest, tweak your trading plan. Which concepts, sit with you the best? Which ones do you like more? Which ones do you see happening more? Which ones can you predict? Which ones have you predicted more? What do you like the most? You don't need everything. You definitely don't need everything. You can just have one sequential SMT followed by precision swing point. Then what do you have after that? An SMT flow, and you're good. You can just be using two asset classes, compare them to one another. For extreme accuracy, of course, you need to be comparing the index futures to the FX triad, of course. And then, you need intermarket sequential SMT, but that's for extreme precision. That's for the people that, don't want to lose more than 20% of their trades. But you don't need that type of accuracy. You do not need that type of accuracy. You literally don't need that, right? But what are you? You're afraid to lose. And you shouldn't be afraid to lose, because you will lose. So you should embrace losing. Prepare to lose. Expect to lose. And when you lose, just don't lose your ass. Don't lose more than you should. Don't lose more than you can manage, because that's a part of the game. Sometimes in trading and, to get warmed up, I take a loss on purpose. maybe just like 0.5%, just to feel that sting, right? To let me know that this is real, because it is. It's not a game. You shouldn't be going in just because they said to expect, price to, right here. Whereas, someone showed me that they risk too much, which is why I'm talking about this right now. Don't do that, because what if I was wrong? I am sometimes. Not a lot, but I am sometimes. If I was wrong, you'd be, cursing me, right? But I am the one that preaches that you should use risk management. Doesn't matter if you made, $20,000 in that trade and then you're happy. You shouldn't be happy. It's business. Treat it as such. I hope that you found this insightful. We'll be back here Wednesday at 6 p.m. Eastern Standard Time with mind-blowing concepts. Have a wonderful day and backtest. Be patient. The markets will be fixed soon.